I wanted just to show my one screen. Usually when I click this button, it allows me to just share one page. Oh, maybe that's why. Okay. That's like that. That's full screen. That's good. Now let me just.
We have to put the phone on mute.
Yeah, but I want to make sure it works first.
Okay, she said that Sharon can see the screen.
She can see the screen. I just want to make sure she can hear us too.
She can hear us.
She can hear us too?
Yeah.
Okay, then yeah, I'll mute us. Perfect. Thank you, Sherilyn. Test. Hey everyone, welcome to the Cost of Buying a Home webinar. We're going to start in about 5 minutes. We're just going to give people a few minutes to get in. Some people might be a little late, so we're just going to give them some time. So, webinar will start around 12:02, so just take your time. Hey everyone, we're going to be starting in 3 minutes. We're just going to give people an extra 2 minutes to jump onto the webinar. So we'll be starting at 12:02. All right, everyone. Welcome to the Cost of Buying a Home webinar. This is our first webinar of the 2019 Home Buying Webinar Series. So welcome, and I hope you get some value out of this. We have an amazing presenter today, Yasmin, and she's going to go over the entire webinar to go over the cost of buying a home, which may surprise you. It's a lot more than you think. So let's just jump right into it. Before we even start the webinar, I wanted to go over some webinar resources that you have available to you. The first thing you can do is you can always ask a question. Now, we have a Q&A section at the end of the webinar where we'll answer any questions, but feel free to ask questions throughout the entire webinar process. There's actually, I don't know how it looks on your screen, but there should be a little section on like a side panel for you to ask a question. It's like a drop down. Feel free to ask as many questions as you want, and then we'll get those answered at the end of the webinar. And if we don't have time to answer them, don't worry, we'll email you later. We'll get in touch with you if we don't have time. We also have two handouts for you available. They're both guides on the cost of buying a home, and if you're a first-time home buyer. Those are free to you, so if you want to, you can go and download those, and those are just extra resources for you for the home buying process. You know, the really fun guides that you can use. I don't believe that we have any polls in this webinar, but in future webinars, keep out for some polls. There's just fun engagement on parts of the webinar. And the last thing that you need to know is that the recording will be available to you once the webinar is over. Everyone who came or didn't come to this webinar will be sent it through email. We'll also be posting it on a YouTube channel. So if you want to rewatch this, or if you missed something, or if you had to get up for a second, don't worry. You're going to be sent the webinar once it's over. And with that, I'm going to introduce today's presenter, Yasmin Penna. Yasmin has been a certified HUD counselor for the last 12 years. She specializes in first-time loan, LMI, community development, and assistance with various grants, including the Savings Match Program and the Financial Strategic Planning. Yasmin is passionate about rebuilding the community and social services and received her degree in business administration from Berkeley College. So we welcome Yasmin, and this is going to be a great time to learn a lot from an industry expert. So with that, here is Yasmin.
All right, thank you. Hello, everyone, and welcome to today's webinar. Today, I hope that you do learn a lot, and just know that if you have any questions, you can feel free to ask while we're doing the presentation, and or you can also hold off till the end of the webinar. And at that point, we can certainly address any questions, any concerns that you may have, or any confusions. So let's just jump right into today's agenda. We're going to be discussing, number one, largest cash payments. We're going to discuss closing costs, other out-of-pocket expenses, loan estimate, closing disclosure forms, how much you need to save prior to even thinking about purchasing a home, future webinars and events, and questions and answers. So let's begin. What are your largest cash payments? So what are the things that you really need to think about once you start initiating the home buying process and thinking about jumping into making this largest investment that you're going to have for the next 30 years? So one of the things that you have to consider is a down payment. So it's the initial payment made when you're buying a home. Typically, the ranges are between 3.5% to about 10% of the home value. So let's just say, for instance, that you do find a home and the home is $100,000. That's the purchase price. Typically, you will put down about, let's say, 3%. So 3% of that would be $3,000. So in other words, you will be financing $97,000. Okay, so that's the difference between the purchase price and the loan amount. The difference between is just exactly how much you're going to put as a down payment. Now, you will also have to take into consideration the earnest money deposit. So what that means is that it's used to create a binding contract if a seller accepts your purchase offer. Typically, it's between 2 to 3% of the asking price, and this serves as a sign of good faith of your commitment. The amount is applied to your down payment once the offer is accepted. So usually when you find a house and you tell your realtor, you know what, this is the house for me, let's go ahead and let's make an offer on the home. The realtor typically draws up the sales contract, and you can say, okay, you know what, I want to put down maybe $1,000 as a good faith deposit just to show the seller that you're really serious about buying their home. Now, again, that really ranges. You can put $1,000, you can put $2,000, I've seen $10,000. That really varies. You will have to speak to your realtor and maybe pick their brain and see how much do they think that you should put as an earnest money deposit. And you can take it from there. So again, usually you will have to present these funds once you make an offer on a home, just to show the seller that you're really serious about the purchase. Now, 3 ways that you can lose your earnest money deposit is if you waive the financial or the inspection contingencies. Number 2, if you can't get the financing in time. Or 3, if you get cold feet. So in other words, if you go ahead and you find a home, you put an offer on it, you give them the earnest money, but then you see another house maybe 2 or 3 blocks away, and maybe that catches your eye, and now you want to cancel the previous loan, just because you get the cold feet doesn't necessarily mean that you're going to get your earnest money back. So you have to really think about, is this really the home for you? Is this really the one that you want to finance? You have to be 100% certain, because once you put that earnest money down, it doesn't necessarily mean that you're going to be able to get that money back. Again, if you get the cold feet or if you can't get the financing in time. So in other words, let's say the closing date is about 30 days from now, and you do not present us with all of the documentations that's required, such as 30 days pay stubs or 2 months bank statements, or you just can't get enough money for the down payment or closing costs altogether. So unless you ask your attorney for an addendum to be able to extend the closing date, then that may be a reason as to why the seller can keep the earnest money or a portion of it. So always, try to give yourself between 30 to 45 days of leeway from the date that you provide the sellers with the sales contract. Okay? Or if you waive any financial or inspection contingencies. Now, let's break down the closing costs. The closing costs are payments that cover the various expenses and fees involved in formalizing a mortgage and concluding a real estate transaction. It usually takes a team of mortgage professionals to process your loan application, and that we can discuss in a future webinar. But just to give you a little bit of an explanation about the loan application, the processing, and the underwriting, from securing credit checks to confirming employment, income stream, and tax records, these fees help cover the wide variety of administrative and underwriting costs it takes to approve your loan. You can generally expect to pay about 1% of your total loan costs. So, for example, a lot of lenders typically charge an origination fee. So if your loan is for $150,000, you'll need to at least shell out $1,500 to cover the origination or the application fee. Here at Greater Alliance, great thing about us is that we don't charge application fees, processing fees, or underwriting fees. Okay, and again, that's a value here at Greater Alliance. You do not have to pay for those types of services. Now, but you do have to pay for title search and other title-related fees. So, what is a title search? A title search ensures the seller is that the seller is a true owner of the property and is legally entitled to sell it. So the seller typically picks a title company to conduct a thorough check into the property you're looking to buy. It also reviews whether there are any property liens, such as unpaid property taxes, or any outstanding third-party claims against the property. So you may ask yourself, what are these third-party claims and what does that mean? Well, let's just say, for instance, the seller decides to make home repairs and they don't pay the contractor. So typically what happens at that point is that the contractor can take that seller or the owner of the home to court. And if the judge finds that the contractor did not receive their pay or something happened and the seller can have a judgment on the property and then place a lien on the property. So the title company insures and goes back 100 years just to confirm that there are no liens, or let's just say, for instance, that seller went to Atlantic City and decides to gamble and places the home as a collateral. So it just makes sure that the home is free and clear of any liens or any judgments, so that once you purchase the property, you're financing the true value of the home. Your title company will also contract an underwriter. That's not something that you have anything to do with necessarily. The title company will hire their own underwriter, and that's just basically used to ensure that your title, both on behalf of you and your lender, is, again, free and clear. So it's a special insurance policy that protects you from any legal liabilities should defects such as fraud or forgery be found following the title search, thus preventing you from landing you in court. So again, you just don't want to buy a home and just find out 10 years later that there's a lien on the property, or there's a judgment, or there's someone coming after you for services that were rendered 10, 15 years ago, and then landing in court and having to pay them back yourself. So it's very important to have title insurance. Now, escrow service fees. So it's basically when you put down your escrow deposit, it goes into a real estate escrow fund that is held by a third-party provider. Usually, it's your attorney, and that fund goes to the seller's attorney, and they hold it in escrow. Okay, this ensures that your funds are secure and will only be released once an agreement between the buyer and the seller has been reached. So typically, those funds are released at the date of closing. While these services may vary, they generally cost between $1,000 to about $5,000. That's the typical escrow service fees that you have to take into consideration. So breaking down the closing costs now for the home appraisal. What is an appraisal? An appraisal is very, very, very important. Back in the days when in 2009 and 2010, there were a lot of appraisal companies that typically overappraised. So we have our own appraisal. It's called Universal Appraisal. They are vetted. And the reason why we are the ones who order the appraisal is because back in the days in 2009, they used to overestimate. So let's say, for instance, a seller decided to sell the home for $400,000, but the true value of it was $350,000. A lot of appraisers used to say that the property was worth $400,000 just to get the loan approved and so on and so forth. But now everything is regulated. So the appraisal's job is to ensure that the price of your new home justifies the loan amount. Your lender will have to have your home appraised. This step confirms that your loan matches the market value of the home, so you're not paying more than what is fair. To protect from bias, you cannot choose your home appraiser. Instead, your lender will contract a third-party licensed individual to conduct the home appraisal on your behalf. Again, they are vetted. Your home appraiser will calculate the value of your home by conducting an in-person walkthrough of the home to record its square footage, the number of bedrooms and baths, and the condition. And it compares it to the county records and recent sales of similar properties in comparable neighborhoods. Lastly, the home appraiser will present a property analysis to you and your lender with the final report of the value. So typically, the appraiser will send us the appraisal, all of the forms, and then we will send a copy to you. Okay, and then you can forward that same copy to your attorney and to your realtor just to show that the property is appraised at the same exact selling price. Now, if your mortgage falls short of the appraised value, you may need to bring either more cash at the closing table if it's a home that you truly, truly want, or what you can do is say, talk to your realtor and talk to your attorney and say, hey, you know what? The seller is selling this home for, let's say, the $300,000, but the appraised value came back at $270,000, and have your attorney speak to the seller's attorney and see if they can reduce the sales price to $270,000. Why? Because we will only lend whichever price is less, the selling price or the appraised value. We cannot lend more than what the appraised value is. All right, so it's always good to speak it over with your attorney once again and just make sure that the seller is on the same page with the appraisal, just so that you don't have to shell out more money at the closing table. It rarely happens when you do have to shell out some more money at the closing table, only because a lot of the times, they do tend to work things out again amongst themselves. And when I mean amongst themselves is amongst the attorneys, okay? If that does happen, then an addendum to the sales contract will be performed and sent over to us so that we can then adjust the sales price. Now, home inspection. It's one of the most nerve-wracking parts of the closing on a mortgage, but getting a home inspection is a critical step in the process and is ultimately there to protect you, the buyer. A home inspector thoroughly checks your property for any damages or repairs that need to be made before you close. If a problem is revealed, you may be able to negotiate with the home seller to have the repairs done before proceeding with a deal, or you may choose to opt out of the deal altogether. So your home inspection does not need to be sent to your lender, as it is not a required lender document. Um, so let's talk a little bit about this home inspection. I always recommend it. It's not a requirement, but you can lose a lot by not doing this. A home inspection can cost maybe between $375 to, like, let's say, for instance, $700. Usually when people go in and they look at a home, they fall in love with it. But we, as, let's say, a first-time home buyers, we don't know exactly what we're getting ourselves into. We don't know whether or not the property has termite, what is under the rug, are the beams falling apart. We don't see behind the walls. So that's why it's very, very, very important to get a home inspection, because they're there to protect you. I always recommend for you to go in with a home inspector, just so that the home inspector can teach you maybe how to turn on certain things or what to watch out for. The home inspector can always tell you, you know what, let's take a look at the roof. And if the roof needs repair, or let's say, for instance, the furnace is too old, they'll also put that on the report, and you can use that as a negotiating power. So let's say, for instance, the furnace costs $5,000 to repair, and they put that on the report. You can use that and go back to your attorney and say, hey, you know what, the furnace is old. I'm going to need at least a $5,000 credit. And your attorney can go back to the seller's attorney and try to negotiate at least some type of seller's credit, so that you can pay less for the home. So you can either add that on, you can deduct that from the sales price, or you can have that as cash back at the closing cost, at the closing table. Or if the property has so many inspections so many problems that the seller, let's say, for instance, is not willing to make the repairs, then at that point you can say, you know what, this house is not for me. The good thing is that the inspector is there to protect you, to let you know exactly what's going on with that particular home, and then you make the decision of whether or not you want to proceed with the sale of the home. What are the other out-of-pocket costs to keep in mind? When you become a homeowner, you're going to have a few new bills in your mailbox. Okay? Let's talk about private mortgage insurance being one of them. I know you've heard this terminology 100 times before if you've been doing some research. PMI is an insurance that protects the lender on most non-government loan programs, and in most cases, a down payment of less than 20%. That requires PMI to be added to the monthly cost of the mortgage itself. So, if you obtain a conventional loan, okay, you will pay private mortgage insurance. So, if you were to put less than 20% down payment, you will have to pay private mortgage insurance. Now, the higher your credit score, the less of a PMI payment you will make. The more of a down payment, the lesser of a PMI payment that you will make. The good thing is that with a conventional loan, once you reach 22% equity, that PMI will be eliminated. You will also have to pay for homeowners insurance premiums. This is an insurance that protects you from incurring costs related to any damages of your home. While most homeowners pay between $300 and $1,500 a year for this insurance, your lender is likely to require you to pay the first year in full at closing or prior to. So, although your homeowner's insurance will be included in your mortgage payment, you'll say to yourself, okay, so why do I have to pay for 1 year up front? So, for instance, let's say you were to close June 1st. June 1st moving forward, your homeowner's insurance, so let's say, for instance, your homeowner's is $1,200 per year. We need to know how much is the insurance premium, and because depending upon how much you're going to be paying, how much your insurance premium is really determines the monthly payment that's going to be included in your mortgage payment. So if it's $1,200 a year, then we will have to collect $100 each and every month so that come June 1st, 2020, we will have the full $1,200 to pay for the following year. So you will have to pay 1 year upfront so that we can cover between June 1st, 2019 until June 1st, 2020. Come June 1st, 2020, we will have enough in escrow to be able to cover for the following year. Okay, so I hope that explains as to why you have to pay for the 1 year homeowner's insurance up front. Obtaining a home warranty. A home warranty plan ensures you won't have to pay to repair or replace items completely out of your own pocket. While you'll still be responsible for paying portions of the service cost, it offers many homeowners peace of mind. Again, it's an option. I would recommend for you to shop around and see if it's something that may work for you. Again, going back to the home inspection, they're going to do their thorough check, take a look at all of the appliances, and maybe at that point you can decide if whether or not you want to obtain a home warranty. Taking a look at the washer and dryer, all of the appliances that are in the home. I mean, it's something that is an option. It's good to have, but it's not something that you have to have. Okay. Prepaid mortgage insurance. Prepaid interest, it's basically prepaid interest charges on a mortgage loan represent the amount of the interest that you owe between signing your loan agreement and making your first monthly payment. So, if you decide to close, let's say, for instance, on the 15th of the month, or let's say on the 28th of the month, you will have to pay prepaid interest between the 1st and the 28th, so that and that will be calculated into the closing cost, and that's something that you would have to pay out of pocket. Okay, so again, prepaid mortgage interest all really depends on the date that you do decide to do the closing on your loan. Courier and notary costs. There may be costs associated with sending legal documents and having a notary to make sure that everything is professional and legal. So typically at the closing table, there will be a notary there, like either your title company or your attorney. But in between, if there are some items that need to be notarized, such as a letter of explanation, or a letter certifying that the document is true and accurate, such as a marriage certificate or a divorce or something of that nature, typically those costs will have to be paid for upfront. Homeowners association dues, that's typically when you are going to purchase a condominium or a townhouse. So a homeowners association fee is an amount of money that must be paid monthly by homeowners of certain types of residential properties, and HOAs collect these fees to assist with maintaining and improving properties in the association. So when you go out and, let's say, for instance, you find a condominium or a townhouse, this is something that you will have to pay for as long as you live in the property. So those homeowners association fees cover the pool, the tennis courts, the common walls. They are the ones who pick up the trash, snow removal. So these are the fees that you're going to be paying for on a monthly basis. Well, think of it this way. At least you don't have to shovel outside, or you don't have to cut the grass or plant any flowers. You have an association that takes care of it, okay? Or you don't have to maintain a pool. So you can think about it that way. The con is that, let's say, for instance, something goes wrong, a roof goes bad. Those homeowners association fees can go up. Okay, so it goes up for everyone throughout the condominium. So let's say, for instance, the condominium spends $20,000. They'll divide it amongst all of the residents until that loan is repaid, and then your homeowners association goes back down. Okay, but it's something that will never go away as long as you live in the property. It's like property taxes. You will always have to pay property taxes for as long as you own the property. Okay, so it's something to keep in mind. Homeowners association dues and let's say condominiums or townhomes are typically good for people who are starting out, maybe someone that lives by themselves. They don't have a lot of time to be keeping up with the upkeeps of the property, or maybe senior citizens that would like to go in that really can't shovel snow, that cannot keep up with the maintenance and things of that nature. So you'll typically find individuals, depending on where they are in life, purchasing condominiums or townhomes. So other out-of-pocket costs to keep in mind are property taxes. You'll need to pay a portion of your annual property taxes at signing, typically 2 to 3 months worth. The annual amount is generally determined by multiplying your tax rate by your home's appraised value. It's not something that you necessarily have to be concerned with. The title company will ask for the taxes, the annual taxes, so they do their due diligence in obtaining that information up front and determining, and so basically what we have to do on our end, we do have to collect 2 to 3 months up front so that we can hold it in escrow, so that once you start paying your mortgage, we have some type of a cushion. Typically, there are assessments, let's say in November, where we do send it out and we do take a look and see, okay, have your property taxes increased or have they decreased? And again, going back to multiplying your tax rate by your home's appraised value, your property taxes are dependent upon the value of your home and the services that are rendered around, like the school district or the police officers, and how many services are out there, and are they good, are they bad? So that's what drives property taxes. And also stamp tax. So many states in the U.S. require a stamp tax, which is a fee charged to process the legal documents in the event of a land transfer home sale. This fee is also known as a mortgage tax, a transfer fee, a recording fee, a deed recording tax, or a documentary transfer fee. So typically you will see this fee in the closing disclosure. Typically the seller will take care of the sales tax, but that's something that's negotiated once the sales contract is in place. Attorney compensation. The cost of an attorney depends on how involved an attorney needs to be and the time it takes to resolve the issue at hand. So typically the attorney will charge you once the loan is closed. But there are some attorneys that do charge you maybe $500 to retain them up front. That's very rare, but again, usually your attorney will charge you once the transaction is closed. A real estate broker commission. While most sellers are responsible for paying these costs, there are occasional instances where these fees are shared by the seller and buyer, or the buyer agrees to pay all broker costs. Most of the time, however, sellers simply incorporate the estimated broker fee into the home sales price. So for instance, let's say there's a home that you're buying for $100,000. Typically, there's a 6% commission that is paid out to both the buyer's realtor and the seller's realtor. So they split the 6% in half. So 3% goes to the sellers and 3% goes to the buyers. Again, typically the seller is the one who pays for these services. Okay, so I always encourage my buyers to go out and hire a realtor, only because there are so many terminologies, so much documentation that goes behind a real estate transaction. Land survey fees. A land survey fee is the price varies widely, not only by locality and surveyor, but also by dozens of project-specific details. Nationally, the average cost to purchase a land survey is between 456, with a range between 367 and nearly 490. A land survey is basically someone that goes out to the property and they typically put pics on all of the property that will be yours. So from the front of the house all the way to the back of the house, just in case you want to fence in the yard or you want to fence in the front portion, you just want to separate yourselves from your neighbors, a survey is required, okay? Because you want to know which tree is yours and if it falls. I mean, so many things can happen. So that's why we always order a survey, okay, a land survey, just to make sure that you know which part of the backyard pertains to you, which tree pertains to you, and if you want to put in a fence. Things to keep in mind are the following. If you have a mortgage backed by the Federal Housing Association, FHA, or U.S. Development of Veteran Affairs, or a VA loan, you may need to pay fees required for these types of loans. Talk to your local real estate agent or an attorney and review any and all closing costs associated with your specific loan. So let's talk about a loan estimate and closing disclosure forms. Before you sit down at closing, your lender is federally mandated to provide you with two legal forms, a loan estimate and closing disclosure form. Now, the loan estimate form is the loan amount and interest rate will be on there. Projected monthly payment will also be on there. Whether you have a fixed or adjustable rate loan, origination and loan processing fees, and closing costs. Okay, so the loan estimate form will provide you with all of the necessary information that you will need to know moving forward. So the first document you will receive is the loan estimate. So the borrowers receive this 3-page form shortly after they apply for a mortgage. The loan estimate outlines all of the terms and costs of your home loan on a purchase transaction. These are typically an estimate since the closing agent has not been identified. Some of this information may include, again, the loan amount, the interest rate, projected monthly payment, whether you have a fixed or an adjustable rate loan, origination and loan processing fees, and closing costs. All of that will be on the loan estimate. So if you decide to shop around, this is the form to be used in order to shop around. The loan estimate will dictate everything on there. If any other major lender will charge you for origination, for points, all of that has to be disclosed up front. The interest rate, the APR. You will also need to know, is it a conventional loan? Is it an FHA mortgage? What are your closing fees? So these are all of the items that you will need to compare. Okay, so the loan estimate form may vary at the date of the closing table, only because, remember, we talked about the prepaid interest up front, so that will be added onto the loan estimate. If and when you lock your rate, that the interest rate is also going to vary, right? That may certainly change at 3 days before the closing table. Those closing costs may change 3 days before the closing table. So it all really depends and varies on the day that you close, okay, and the fees that your attorney is also going to charge you. So we're not certain of that. We do estimate how much they're going to charge you, and that is included in the loan estimate, but it's not 100% guarantee. So the closure disclosure form. What is this document? At least 3 days before you reach the settlement, you will also receive the closing disclosure form. This document breaks down all of your closing costs and fees and sets the total closing costs you can expect to pay. Once you receive your copy, this document and the stated cost should not change before your scheduled closing date. So again, 3 days before your closing date, you will know how much you will have to bring to the closing table. Okay? It itemizes everything for you. What else does this include? The closing disclosure also includes the final terms of the loan you selected, the details. It details each closing cost and details of who pays and receives the outlined cost at the time of closing. It's strategically structuring closing costs in addition to reviewing your loan amount, rates, and terms, and monthly payments. There are a few items you should look at. So if you can't afford your closing costs, there are generally two avenues you can take advantage of. You can either persuade the seller into absorbing some or all of the closing costs, or you can negotiate with the lender to pay the costs at closing into your loan. So the second option comes with a price. If your lender agrees to include the closing costs in your mortgage, you will have to make up for the shortfall by paying a higher interest rate, and thus will have to pay a higher monthly mortgage payment. Now, one of the other ways that you can include your closing costs into the loan is asking for a seller's concession. So a seller's concession is when you can finance up to 3% of the loan amount. Okay, so let's say, for instance, your loan amount is very easy. Let's say it's $100,000. You can ask your realtor to add $3,000 to the $100,000. So you'll finance $103,000. At the closing table, the seller will still walk away with $100,000, but $3,000 will be applied towards your closing costs and down payment. So that's another way that you can absorb some of the closing costs. We're here to help with all of your home buying programs, but that's going to be included in another webinar, that we will discuss in a few minutes. As you saw, buying a home includes a lot more than you first realized. We recommend you save between $10,000 to $15,000 for a house around $250,000. The smart rule of thumb is always save between $10,000 to $15,000 for a home of $250,000. Only because, let's just say, for instance, you don't know how much you need to come up with. Where do I start? How much do I save? Typically, people start when they receive their income taxes, or they receive a bonus at work, or they start eliminating non-essential items at home. You can combine all of those savings, and if you're short in some ways, between, let's say, for instance, $5,000 to $10,000, in another webinar, we're going to cover all of the programs. So that will be included in the June 6th webinar. What programs are available to help you qualify for a mortgage? That will be on June 6th. Guys, I recommend for all of you to attend that webinar. It's going to be very, very, very informational. You're going to have a lot of resources available for you for down payment and closing costs. Again, the rule of thumb is $10,000 to $15,000, only because we're looking into a home purchase of $250,000. If you qualify for other programs, then we can help you with the rest of the funds for the down payment. Or we can strategically reorganize the closing costs to be able to be included into your closing costs, such as a seller's concession, like we discussed before. Now, June 20th, we're going to have the mortgage approval process webinar. That's also going to be very informational. And on June 26th, we're going to discuss do I need a realtor, and the benefits of having a realtor negotiate on your behalf and helping you find your first home. We're also going to,
The home buyer fair.
yeah,
Want me to talk?
yes, we're also going to have the home buyer fair. This event is a one-stop shop to help first-time home buyers become confident, educated, and prepared for all consumers. You're going to also meet with industry experts. You're going to speak with realtors. A home buying inspector will be there. Home buying counselor will be there. A title company, loan officers, home insurance appraisal, real estate attorney, and much more. You're also going to have the option of attending workshops. There are going to be 3 of them. One of the workshops is going to be getting your finances in order before buying a home. That's going to be concluded by a HUD counselor. There's going to be a Spanish and an English. There's also going to be a roadmap to buying your first home and a panel discussion where all of the specialists are going to be in a panel. You can ask them all of the questions that you'd like, and they'll be able to answer them. And the details of the event will take place on June 15th between 9 a.m. to 1 at the Holiday Inn at Hasbrook Heights in New Jersey. Best of all, it is free. So register today, and I hope to meet all of you there.
Alrighty. We just have a little bit left. Now it's time for the question time. So if you have any questions, please ask those below. I'm gonna see right now if anybody already asked. Looks like we have a couple questions. Let me just pull this up real quick. I wonder how to move this out though. Okay. We have a bunch of questions. Okay, great. So the first question that someone asked is it okay to put 10% and use the saved up money to cover the cost for the home?
Absolutely. Absolutely. I always recommend the more money you have for down payment, the better it's going to be because your your mortgage payment will be less, it'll be reduced, and your mortgage insurance premium will also be reduced.
All right. Next question we have is, what is the average cost of a home?
Depends on the area. So if you're looking in, let's say, for instance, in Newark, it can range between, let's say, 150 to 250. If you're looking in Bergen, it can go up to 350. Hudson, I mean, it really all depends on the area that you're looking in. I recommend going to Zillow or Trulia, or even better, Redfin. They have the true and actual, appraised values around that area, and they're the most up to date with properties that are for sale. So definitely that's something that you can speak to a realtor about if you're not sure on where to buy and how much the costs are. Another thing that I do recommend for you to look at is not just the amount, but more so also the property taxes, because that's going to influence a lot on your mortgage payment.
All right, thank you very much. So I think that's it for the questions. Feel free to ask it. We'll have one more slide left. But if you didn't get a question answered, or if you were too nervous to ask one, feel free to reach out. You can always message us or email us at info@greateralliance.org. Don't worry, we'll always be here for you if you have any questions answered. So again, and also if you want to join us on the Home Buyer Fair, we'll have an entire panel for questions too. And then the last thing I want to mention is that we're going to have a survey right after the webinar concludes. You'll also be emailed the survey. Please, respond to the survey. We use those answers to make our webinars better, to give our, members a better experience. So we really appreciate if you fill out the surveys. And in addition to that, you have a chance to win a $25 Visa gift card. So it's a win-win. There's no reason why you shouldn't do that. And especially, it really helps us make a better experience for you at the end of the day. So we would really appreciate if you took the time to fill out a survey. It's only like 4 or 5 questions. It should only take you like 30 seconds to a minute. So it's a very quick thing to do. And that's basically it. Thank you for attending and interacting and the questions that you asked. Again, just to remind you that you will be sent a link to the webinar through your email, just in case you missed something you had to get up. Also, I want to let you know that you should follow us on Facebook, on Twitter, and on YouTube. We're also going to be on Instagram soon, so keep an eye out for that. We post a lot of great content, pictures of events that we do, so it's a really fun place to get some information. Thanks again for Yasmin for being an amazing presenter. Here are some of her details here. So if you want to reach out to her, feel free to do so. You have her email and phone number. And again, if you would like to schedule an appointment with any one of our mortgage experts to go over any questions you have, or if you want to get a mortgage or whatever you want, even if you want to just, talk about basic stuff, please give us a call, 800-963-1937, or you can always visit our website at greateralliance.org/mortgage-loans. So thanks again for attending, and we hope you got some value out of this. So have a great day, everyone. Exit out. Should just be like a simple. Yep.